Welcome to the deep dive. Today, we're taking a shortcut to understanding what's been happening with Bitcoin, that big digital currency everyone's talking about.
Yeah.
Our mission for you, really, whether you're kind of new to investing or maybe just curious, is to cut through the noise. We want to make sense of the latest trends, looking specifically at June 28th to July 1st, 2025.
Exactly. We'll try to pull out the key insights from what the market's been doing lately. Things like institutional money flows, corporate buying, and what it all points to for Bitcoin's outlook, both near term and maybe further out.
Okay, so right now, Bitcoin's trading around $107,000 USD. Let's break this down, all right? So Bitcoin's been in this consolidation phase, right? Just kind of hovering around that $107,000 mark. More specifically, staying pretty tight between $106,500, $508, and $8,000. What's going on there? What's driving that stability?
Well, what's really interesting, technically speaking, is that chart analysts are seeing a bullish pennant pattern forming.
Okay, bullish pennant.
Yeah, it's basically a period where the price kind of consolidates after a strong run-up.
Yeah.
And often, it signals there might be another burst upwards. So it suggests Bitcoin could potentially push higher, maybe challenge, say, $112,000 or even $120,000 if the underlying trends hold strong.
And those trends, they seem pretty powerful. I mean, we're seeing massive institutional money pouring in, aren't we?
Huge amounts.
Those U.S. spot Bitcoin ETFs, the investment funds, letting traditional investors get exposure without actually holding the crypto themselves, they pulled in roughly $2.2 billion in inflows just last week alone.
Incredible.
And that's 14 days in a row of net positive flows. Year to date, the total inflows are nearly $14.9 billion. That's substantial.
It really is. And BlackRock's IBIT fund continues to be a major driver there. Which leads to the question, right? Beyond just the ETFs, who else is accumulating Bitcoin on this kind of scale?
Yeah, that's a crucial question. Because corporate players are making some really big moves.
Right.
Take MicroStrategy, for example. They just snapped up another 4,980 Bitcoin. That cost them about $532 million.
Wow.
Their total stash is now almost 597,325 BTC. That's worth somewhere around $64 billion. It really signals, I think, a fundamental shift in how Bitcoin's seen, from just speculation to maybe a legit treasury asset.
Exactly. And you see others starting to follow that playbook. ProCap Financial, they're backed by Anthony Pompliano, who's a well-known Bitcoin advocate.
Right.
They're putting together a $1 billion Bitcoin treasury. It really echoes that institutional approach MicroStrategy pioneered. And if you kind of zoom out, look at the bigger picture, Bitcoin's up around 74% just this year. That shows some serious momentum, even when you compare it to, say, the recent surges we've seen in stocks.
Okay, so let's tie this together. What does all this mean for Bitcoin's value now and going forward? And maybe more importantly for you listening, what should you be keeping an eye on? Bitcoin's price is showing a little dip right now, but that consolidation we mentioned, around $107,000, $108,000, that seems key short term.
It is. It's really important to watch for a clear, decisive breakout above those levels, or conversely, a potential pullback if it hits key resistance points.
Resistance being those price levels where selling tends to kick in historically.
Exactly. And while all this institutional demand paints a very strong bullish picture, we always have to remember Bitcoin is still, a highly volatile asset. A significant pullback isn't out of the question. That could happen if, say, there are unexpected regulatory changes, maybe a wider market downturn, or even if these big institutional flows were to suddenly dry up or reverse.
That makes sense.
Yeah.
However, looking at the momentum, the continued ETF inflows, that significant corporate buying we just talked about, it really does seem to support a bullish bias for Bitcoin's future, doesn't it?
I'd agree. These are what we might call structural tailwinds. This increasing institutional adoption, it could very well push Bitcoin towards $150,000, maybe even beyond that in the longer term. So this isn't just about the little day-to-day fluctuations like today's slight dip. It's more about this profound underlying demand that seems to be building.
Okay, so the bottom line here, maybe the key level for you to watch, is for that decisive breakout above the, say, $109,000 to $112,000 range.
Yeah, that could really set the stage for the next major leg upwards, all driven by this new wave of adoption we're seeing.
All right, so let's wrap up our deep dive. The core insight for you, maybe the main takeaway is this. Despite the current sideways movement, Bitcoin's overall bullish story seems significantly boosted by this, frankly, unprecedented surge in institutional and corporate demand.
And that maturing market points to one really crucial level for you to keep an eye on, that decisive breakout above $109,000 to $112,000. That could really signal Bitcoin's next major phase.
Which leaves us with a final thought.
Yeah, it raises an important question for you to think about. How might Bitcoin's evolving role, potentially as a treasury reserve asset, fundamentally reshape global financial strategies, not just for big institutions, but maybe for individual investors too in the years ahead?